In this video, I'm going to show you exactly how you defend your accounts in this falling stock market. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, in this video, I am going to show you how I defend my account, and I'm going to show you exactly how I do it. And I'm going to show you right now in the month of August how I'm doing it when the market is absolutely selling off the top. And I'll tell you, all the fluff is coming out. And you, like me and others, have been caught in this. But what I'll tell you is this. 2 weeks ago, I emailed the members telling everybody it was coming. I'm going to show you that email. We went ahead and took actions, ready to defend our account. I'm going to show you how I defended my account. And then I'm going to show you the absolute most brilliant idea, and we're talking dividends, so I want you to stick around. Hey, look, this year, right now, I've generated some $350,000, and it is August 3rd, 2024. I just sent the members my monthly recap where we started out the month literally down $11,000 and doing what we do here, selling premium, writing covered call, selling cash secure put, using the poor man's covered call. Tell you what, we battled back to finish the month plus 18,000. If you're not selling premium, I'm going to tell you right now, you need to learn how to write covered calls and sell cash secure puts. It's one way to defend your accounts. See, even in a falling stock market, we could sell premium against our shares. I'm going to show you that I do that with my shares all the time. And I am down, seriously down on some positions. But we're selling premium, and we're going to hold that position till the end. Now, I'm going to give you a bit of advice at the end of this video, so I want you to stick around. I get this question all the time about, John, my portfolio is wrecked, and I'm going to stop right there. I'm going to finish that statement and question at the end of this video because I'm going to tell you exactly what I tell everybody when it comes to the stock market. Let's go ahead and get this going because I got so much I want to show you here. If you like anything you hear today, I want you to subscribe to the channel. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing is this. We're going to start with that email because not only did I call this some 2.5 weeks ago, and you could see right here, it says 4 weeks, but we just turned a new week. 3 weeks ago, I wrote this to the members. Now, I'm never going to say that I can time market tops because we just can't, right? And we have no crystal ball. The stock market's going to go higher and lower, and we want it to go higher. But I'll tell you what, we can clearly see when the stock market is absolutely overbought. And at the time of this email, I actually told the members the markets are overbought. Any RSI reading over 70 means it's overbought. And what that means is they're going to sell it. And I said to the members, this is exactly what's going to happen, and this is exactly the plan. We actually had a plan. See, at my membership, I don't just talk to talk or buy one share of stock that I give a trade alert on. I actually invest real money, and all of the money is real. See, I got to fund my retirement. I'm in retirement. So all the members that write to me saying, hey, John, all these trade alerts are absolutely awesome, making money, this, that, and the other. Yeah, because they're my trades. I'm not sending you anything else but my trades. I did 41 trades in July because I'm paying my bills, living the good life with this, with what you see here, trading. So I got my eyes everywhere, right? And what I'm trying to do is show you the world through my eyes. And what did I see? I saw the stock market was overbought. I mean, this is ridiculous. The S&P 500, one of the more conservative indexes. Look at that bad boy. It has an RSI of 70. And of course it was going to get wrecked. It was just a matter of time. It was literally ticking, and we got the news for which the sell-off came. And that was the Fed's kind of waffling on interest rates, and oh yeah, the jobs numbers didn't come in, and next thing you know, they are literally taking the top of the market off. And probably most of you, including myself, got caught in that. Now, what I'll tell you is this. We did have a plan, and we did execute the plan. Part of the plan was to get rid of a lot of my poor man covered call trades because, as you know, in a falling stock market, The real issue, you always hear this about the poor man's covered call. In a falling stock market, it never works. The poor man's covered call never works. There's two reasons. See, they never tell you the two reasons. Well, one, they don't tell you how many reasons, but there's two reasons. Number one reason, Leap's call options do not work in a falling stock market. It is called time value, because when you buy your Leap's call option, and typically most YouTubers will tell you to buy the 70 Delta, well, the 70 Delta is going to have a tremendous amount of time value. And as the stock falls, its delta rises. And here's your problem. All that time value leaks out of the Leaps. I just had this problem with Snowflake where I paid about $6 in time value premium, and as the stock went from 168 down to 127, well, all of that $6 bled out of the stock. So even if the stock gets back to 168 and we're about to get to expiration, yeah, there's no time value. That $6 is gone. The only way I make that $6 back is if I had written 6 covered calls worth $1 or more. That's problem number one. Problem number two is when we buy that Leap's call option, and say we buy a 50 strike. Doesn't matter where the stock's trading. Say we pay the 50 strike. If the stock falls below 50, guess what? That Leap's call option is worthless, because now you're not protected. Because if you wrote a covered call, are you going to buy somebody's shares for $50? Of course you're not. You'd go out on the open market, for which it's trading considerably less, and then you would buy the shares. See, those are the problems with the poor man's covered call. In a sideways market that does move a little lower and does move a little higher, we can make hella bank. And here's the difference from all the poor man covered call YouTubers out there. They just don't talk about these things, man. I am knee deep in this. I could show you at least 15 poor man covered calls over the past year for which we made unbelievable amounts of money. It's because I understand and work the deltas. I have trackers and initial trade setups and all these things that help me, so I pick a great strike price and I get out of the trade profitable. See, at the end of the day, it's just a numbers game. This is all just a numbers game. With that said, the numbers told me I needed to get out of my poor man's covered call trades, because if the market's actually going to fall considerably, well, my Leap's call options are going to fall. I'm never really going to get out of them profitable, because my Leap's call options, I typically buy the 5 to 6 months. Most people tell you to do the 12-month or more, and that's fine, but I do the 6-month. And chances are I've been trading them and we're getting near 6 months. So if the stock market were to tank, then I am not going to recover. And we know that. So I went ahead, I sold all my Leap's call option. We started to deploy the in-the-money covered call. I want that downside protection, right? If I buy the shares up here, say $50, and I sell the 45, I'm going to get $5 in downside protection. Now, if the numbers work out, I might make a decent amount of profit. I got the in-the-money calculator on my website, cptdashboard.com. I use that on every single trade. You can get all these free spreadsheets on my website, cptdashboard.com. Now, we also like the cash secure put, and I have been using the cash secure put during this tumbling stock market, and it is just paying huge premiums. I'm going to show you here in a minute. So we had a plan, we executed the plan, and now here we are. The market is actually tanked, so I write the members an email and we talk about a plan. See, I don't go away when the stock market falls, and I definitely don't pull out all the trumpets when the stock market's going higher. I think you know who those people might be. Not here. This is real money being invested, and I am risking every single nickel to pay for my retirement. So what I do is this. I absolutely see things and I let my members know. So if you go to my website, cptdashboard.com, click Upgraded Dashboard, get your 1 free month. I'll tell you what, the membership is blowing up because people love the trade alerts and they love the write-ups and they love seeing how I work this tumbling stock market. cptdashboard.com, click Upgraded Dashboard. I got a 1 free month offer for you. Now you're saying to yourself, okay, how are you going to show me to defend my account? When the stock market's tanking, how am I going to defend my account? First of all, that was number one. You have to have your eyes and ears in the game, right? If you didn't see that the S&P 500, its RSI was trading at overbought, in fact, it was smoking hot, then of course you're going to get blindsided. And you did get blindsided. See, we didn't get blindsided. Now, whether my members took actions or not, I'm not sure. But at the end of the day, we need to identify when these things can happen. Now, granted, it took about 2 weeks, but we knew it was going to happen. Now, once it happened, we started using the plan that I just talked about. But leading up to that, we're using the covered call, cash secured put, and we're using the poor man's covered call. And what we're doing is this. We're defending our account by adding money to it, right? So I own shares just like you do. Now, you're a buy and hold investor, and quite frankly, you hold it, and you might collect the dividend, you might not. You're buying those shares for stock appreciation, and man, you are feeling rich. Well, you bought Nvidia at $100, and you're feeling good when it's trading at $130, and now with the stock market falling, you now own it at 100 again. See, this is where the selling premium investor beats you hands down. Because that person is buying Nvidia at 100, and as the stock goes higher, they're writing covered calls, generating huge premiums. Oh yeah, they're having their shares taken away, capping their upside, but they get involved with the stock again, or maybe another stock, and we're doing it again and again, and we're making 3 to 5% per month. Hey, that's not me. That is the overall market when it comes to selling premium. But see, we do it with leveraged ETFs to the indexes, so we actually make a little bit more. I just did a trade for 2 weeks using a leveraged ETF to Coinbase, and we're going to go ahead and make some 7.9%. Now, you say to yourself, hey man, you're too risky with these leveraged ETFs, this, that, and the other, because I've been watching YouTube and I'm all scared because they tell you not to use leveraged ETFs. The problem is those people do not tell you what you're investing in. See, they don't want to invest in leveraged ETFs because they're afraid, or they think it's a depreciating asset. But again, they don't explain the benefits. See, we've been using leveraged ETFs prior to 2020. We have been absolutely using them because they're indexes. Do you understand? If you're going to invest in the SPY or the QQQ, that's an index. They created leveraged ETFs that trade off the indexes. When you buy the SPY for $500+, you're using all that fat capital. Well, you're going to make your nice percentage gain. Well, that's the SPY. You know that UPRO is the leveraged ETF to the SPY. So when you're investing in the SPY and you're making 1x, I'm using UPRO making 3x. Now, you have to have a mindset. If you don't have the mindset that it's 3x and you understand that it's going to move up and down 3x, and when it falls, you can be wrecked in terms of total portfolio value and percentage down, then you need to sit on the bench and just let me work the 3x leverage ETF and make all that money. See, me, I don't look at it like that. Never look at the 3x leverage ETF in terms of its price, its value. I don't care. I'm trading the index. I'm trading the S&P 500. So when the S&P 500 goes up, I'm going up. When it goes down, I'm going down. It's the S&P 500. Is it going to crash? Is it going to go to zero? Of course not. Now, somebody will say, well, John, it's a depreciating value because they take out X% daily. Look, I'm writing covered calls. This is the absolute joke when you have the naysayers talk about leveraged ETFs. Yes, they take a little bit of a fee daily. And what that means is if I buy a leveraged ETF for $100 and it never moves for 1 full year, it's going to be worth less than $100 come the end of the year because the company managing the ETF takes out a little tiny fee. But that's not the case. And I'm selling premium anyway. So when I write a covered call and I get my share price and I make 7 to 8%, that's a fixed number. So that whole idea of a depreciating asset, out the door. You know, at the end of the day, that's the thing. People look at volatility as risk. And that is the thing you need to separate yourself from. If you think the S&P 500 is a risky investment, then yes, don't invest in either the SPY or UPRO. And to be honest with you, if you have any sort of 401k and you're not managing it, you're probably in the S&P 500. It's called the overall stock market. So with that said, we use leveraged ETFs to write covered calls using the indexes. Now, we also sell cash secured puts on those as well. So we can make money as the stock market falls, right? So we make money when it goes up, we make money when it goes sideways, and we make money when it falls. So selling premium defends your account. So what I want you to do is learn how to sell premium. Again, join my membership. Just sit back and watch me work. You see every single trade that I do. I have like 15 positions on, and I take on a lot of positions just so I could show members different trades. I think I'm in a Cisco trade that I like, but to be honest with you, I might not be in that Cisco trade if I didn't have a membership. I love showing the members how we can use multiple different stocks with multiple different profit projections. And then we work the trade. Everybody gets a little bit of something from my membership. That's number 2 way to protect your account. So this is step number 3. We're going to take some of those, if not all of those, covered call premium profits, and we could either put them into another stock to trade premium on, or we could buy more of the shares that we're down on, right? Dollar cost averaging, reducing our break even. Or we take all that profit like I have and dump it into dividend paying stocks. And that's exactly what I do. If you've been with me since February, you know that every time I get a covered call profit, we dump it into a dividend paying stock. We try to accumulate 1,500 shares of that dividend paying stock, and then we move on. That would be a dividend tree producing a cash dividend. I want to have 10, 20, 30 of these things. And that's what we do. We sell premium, buy dividend paying stocks. Those dividend paying stocks pay us a passive income, protecting our account, right? As our accounts are diving, our cash side is growing. And maybe you take this money to pay the bills, live the good life, or maybe you take this to drop it back into the dividend paying stocks, reducing your cost basis. Adding new shares, so when the market does go higher, for which it will, just have to give it time, have to be patient, you're making more money per share because you have more shares. Now, another way to defend your account, and I love this even better. You remember when I talked about the dividend wheel? Everybody in the comments hated it. Oh, they said it's way too much work, and oh, it'll never work, and why are you wasting your time? Well, I've completed a couple dividend wheels. Now, real quick on the dividend wheel, I buy a dividend paying stock and I collect the dividend. When I collect that dividend, I write it down as I'm going to buy more of those shares later. Now, the idea is this, I'm going to sell that stock. And yes, I understand, I'm going to sell it minus the dividend. But what we're going to do is we're going to take that cash and we're going to sell cash secure puts. We're going to do this weekly on leveraged ETFs. And you can see what I've done here with PYPY. We went ahead, had 1,500 shares. We then collected the dividend, which is going to be 17 new shares. We now take that money and we start wheeling it. When what that means is we pick a leveraged ETF and we do a deep out of the money cash secure put. We don't want to be assigned the shares, so we buy it back as time decay moves that option down to 0. When we do that, we make a profit. That profit turns into potentially more shares. And here is the completed dividend wheel for July for PYPY. I just started with my YMAX because we just got the dividend, went ahead, picked up the dividend. We're going to get 35 new shares. Then I turn right around and sell a cash secure put. I'll be making $625 for that. We'll keep wheeling it, selling cash secure puts. Real quick, we'll take a look at AMDY. This is another one that I just closed. You can see we collected the full dividend for AMDY. That's 81 new shares that I will be purchasing. Then I did 2 covered calls, 88 shares, 48 shares. We get back into AMDY when the stock's cheaper. Look at where we sold and look at where we bought back in. And this is ridiculous because now I go from 1,500 shares to now having over 1,700 shares. And as soon as I collect this dividend, we're going to wheel it again, defending our account, using the selling premium strategy to add money, to add shares, defending our account. Now let me finish up here. I get this question all the time. They said, John, my portfolio is wrecked. I'm down. I'm making all this money selling premium, but I'm down on my portfolio. And that's where I want you to sit back and have the mindset that what we're going to do is this. We're going to focus on that individual trade. We're not going to focus on the bigger picture, which is our portfolio, because here's the deal. If I have 3 trades on and I make each of these trades green, well, we're going to have a positive result. It's very important to focus on the trade. And that's what I do. In my world, I take every single trade that I have put on and all I do is focus on that trade. And I try to make that trade a checkmark green trade. Hopefully I've diversified so any one of these positions is not that big. So if I have an X, I've had 7 wins versus 1 loss. Hey, look, it happens, and sometimes you have to pull the ripcord and get out of a trade. But what we want to do is focus on the trade. You know, if you go in and look at your portfolio every single day in these down markets, you're just going to get frustrated, you're going to get depressed, and you're going to become just like everyone else where you coil up in a fetal position and you don't look. See, that is the problem because we have to pay the bills. The Visa bill still comes. The Verizon bill still comes. We want to live the good life. We want to retire. Well, if we don't stay in the game mentally, then you're just not cut out for this. You need to focus on the mindset. The mindset is we're going to focus on every single trade. We're going to manage it and try to get better and better. I told you earlier that I have many trades for which I might be down. We have been selling premium along the way. I have an SMCI trade right now that is tremendously down, and it is absolutely an anchor on my portfolio. And I let the members know what my plan was. And look, it's not pretty. I don't let it get me down. I'm going to work the trade as the trade presents itself. Take what the market will give you. SMCI to have earnings, and then after that, we're going to start working it because I'm down. But what I'll tell you is this. I have generated some $30,000 using a down position in SMCI. Now, I'm down much more than that, but that's okay because the mindset is we're going to keep working the trade until it comes green. If we can do that, then that's when we know we're on top of our game. Every trade I put on, I want that to be my next best trade. And when we look back at all the trades we did this year, whether the markets were up, down, sideways, if we managed our bankroll well, we were diversified, the chances are if we took losses, they weren't that big. But I'll tell you what, chances are in the selling premium strategy, you won 2 times out of 3, and that means there's a lot of green trades out there. And there's a lot of green trades to be had. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.